Hey everyone, welcome back to Corporate Decoder. Today, WKSP just filed an amendment to its proxy statement, and I'm seeing a few things that could signal huge changes ahead. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about an upcoming shareholder meeting where they will vote on a reverse stock split and other big decisions that could really shake things up for the company. Alright, so Worksport Limited is getting ready for its 2026 annual meeting of shareholders. This meeting is super important because shareholders will be voting on some key proposals that could really change the shape of the company. Let's look at the main things shareholders will be voting on. First up is the election of 5 directors, then they'll vote on ratifying the appointment of their independent auditors. Proposal number 3 is an advisory vote to approve the board considering special dividends if the company sells off a business unit or a big asset. Think of it as shareholders weighing in on how the company should handle a big cash windfall from selling something. Proposal number 4 is a really big one. Authorizing the board to do 1 or more reverse stock splits or even forward stock splits at ratios anywhere from 1-for-2 all the way up to 1-for-250. This is essentially giving the board a lot of power to change the number of outstanding shares. Lastly, they will vote on approving the adjournment of the meeting if more time is needed to get proxies, which means getting more votes in. Now, why did you might have received a notice of internet availability of proxy materials? Well, the company is trying to be more environmentally friendly and cut down on costs by sending out notices that guide you to the documents online instead of mailing physical copies to everyone. You can still get printed copies if you want them. If you are a shareholder of record, you will get one proxy card covering all your Worksport common stock and series of preferred stock. If you hold your shares through a broker, bank, or other nominee, you will get separate instructions from them. So, to recap, the shareholders will vote on electing directors, approving the auditors, the special dividend idea, the stock split authorization, and the meeting adjournment. When it comes to voting, if you hold shares in what they call street name through a broker or bank, your broker might vote your shares for you on some issues, but not others. For example, they can vote to ratify the auditors without your specific instructions, but they cannot vote on the election of directors, the special dividend idea, or the stock split proposal without your input. If you don't give instructions on those, your shares will be treated as broker non-votes, which means they are not counted for or against the proposal. Abstentions and broker non-votes are tricky. For determining if enough people showed up to have the meeting, called a quorum, they are counted. But for the actual voting results, it is different depending on the proposal. For director elections and the advisory proposals on dividends and adjournment, they don't really affect the outcome. However, for the big one, Proposal 4, the stock split, both abstentions and broken non-votes count as a vote against it. This is pretty significant because Stephen Rossi, the CEO, owns most of the series of preferred stock, which gives him about 51% of the voting power. He has indicated he intends to vote his shares in favour of the stock split. Let's dive into the election of directors. The proposed directors are Stephen Rossi, Lorenzo Rossi, Craig Loverock, William Carrigal, and Ned L. Siegel. Stephen Rossi is the Chief Executive Officer, President, and Chairman. Lorenzo Rossi is his father. The rest are independent directors. Stephen Rossi, the CEO, has been with the company since 2014. He really founded Worksport Ontario and has a lot of patents assigned to the company. He has been instrumental in turning a distribution centre into a manufacturing facility and launching new product lines. The company seems to credit him with leading strategic growth. Jennifer Kartychak is the Chief Financial Officer. She has a strong background in public accounting with over 10 years of experience, including time at Ernst & Young. She also worked at Moog Inc. and has experience with SEC reporting and accounting for public companies. Lorenzo Rossi, Stephen's father, has been a director since 2014 and is also the CEO of Terravis Energy, a subsidiary. He has a background in education and financial oversight. Craig Loverock has been a director since 2019 and is the chair of the Audit Committee. He is a CPA with extensive experience in accounting and finance. William Carrigal joined the board in 2021 and is the managing director of Quadem LC, a corporate advisory firm. He also serves as chief financial officer for other NASDAQ-listed companies. Ambassador Ned L. Siegel also joined the board in 2021. He has a diverse background in international business management and served as the US ambassador to the Commonwealth of the Bahamas. Now, for the juicy stuff, the financials. In this table, we see a comparison of executive compensation and company performance. For Stephen Rossi, the principal executive officer, his total compensation was about $1.3 million in 2025, down from over $5.5 million in 2023. but the compensation actually paid after accounting for certain things was around $452,000 in 2025 and $348,000 in 2024. Interestingly, the value of an initial $100 investment in Worksport stock has seen a massive drop. In 2025, that investment would only be worth about $24, a huge fall from $149 in 2023. The company's net sales, however, show a positive trend. They jumped about 90% in 2025 to over $16 million, a strong recovery from just over $8 million in 2024. This increase is attributed to new product offerings and expanded production efforts. Looking closer at Stephen Rossi's compensation breakdown, his salary in 2025 was around $302,000, which is mostly consulting fees and some benefits. In 2024, his salary was similar at about $348,000, including consulting fees. The big swings in his compensation seem to come from stock options. In 2025, he was granted options valued at over $844,000. In 2023, the value of stock options awarded to him was over $5.1 million. This shows a significant shift in how his compensation is structured, with more emphasis on options in certain periods. As of the end of 2025, Stephen Rossi had a substantial number of unexercised stock options. He holds over 491,000 options with various strike prices and expiration dates. For instance, he has options granted in 2023 with a strike price of $17.4, and others from 2025 with strike prices as low as $3.09 and $3.89. This indicates he has potential upside if the stock price rises significantly from these levels. The company has several equity incentive plans, including the 2015, 2021, and 2022 plans. The 2022 plan is particularly interesting because it has an evergreen formula. This means the number of shares available for awards automatically increases each year. As of the 1st of January 2026, the number of shares authorized under this plan was over 1.5 million. This allows the company to grant more stock options and awards to attract and retain talent. The directors receive compensation for their services. In 2025, Craig Loverock earned about $101,000. William Carrigal's compensation was higher at over $271,000, and Ned L. Siegel earned over $125,000. Lorenzo Rossi received about $164,000. A significant portion of these amounts comes from stock awards and options granted, reflecting an alignment of director interest with shareholder value. For example, William Carrigal received $176,500 in stock awards. Looking at who owns the company's stock, Stephen Rossi is the largest beneficial owner of common stock with about 796,000 shares, making up over 5% of the outstanding shares. He also holds all of the series of preferred stock, which gives him 51% of the total voting power. This means he has significant control over company decisions. Other executive officers and directors collectively own about 5.84% of the common stock. Now, about the auditors. The audit committee is recommending Lumsden and McCormick LLP to continue as the independent auditors for fiscal year 2026. They incurred audit fees of $182,000 in 2025, up from $110,000 in 2024, and tax fees of $53,000 in 2025. The good news here is that the audit committee pre-approves all services, ensuring independence. This proposal is about expressing shareholder support for the board to consider special dividends if the company sells off a business unit or a major asset. Essentially, if they sell something big and get a lot of cash, shareholders want to give the board a nod to consider giving some of that money back to them through dividends. It is important to know that this is just an advisory vote, meaning the board doesn't have to do it, but they will consider shareholders' wishes. This is the proposal that could really change the share structure. The board is asking for authorization to enact one or more reverse stock splits, which would reduce the number of shares at ratios from 1-for-2 up to 1-for-250. They are also asking for the authority to do forward stock splits, which would increase the number of shares. This is often done to try and boost the stock price to meet listing requirements, like staying on the Nasdaq. They mention a previous 1-for-10 reverse split on the 18th of March, 2025. The company is currently meeting the minimum bid price requirement of $1 per S-share on Nasdaq. But this authorization gives them flexibility. If they go through with a reverse stock split, the number of outstanding shares will decrease. This could, in theory, increase the per S-share market price. However, there is no guarantee this will happen, and sometimes the stock price continues to fall even after a reverse split. It is a bit of a gamble. They also note that some investors Especially institutional ones avoid low-price stocks, so a higher price might make the stock more attractive to a wider audience. But they also warn that the total market value of the company might not increase and could even decrease. Historically, about half of microcap companies that do reverse splits eventually get delisted. This is a significant risk. The company is very clear that they might not implement this at all, even if it is approved. If a reverse split happens and it results in a fractional share for a shareholder, the board is thinking about rounding up to the nearest whole share and not paying cash for that fractional part. This is a detail that could affect shareholders owning a small number of shares, not evenly divisible by the split ratio. This last proposal is basically a backup plan. It allows the board to adjourn the meeting if they need more time to gather votes or proxies. This is pretty standard and often approved to ensure they have enough shareholder input. Looking at related transactions, Stephen Rossi, through an entity he owns, received consulting fees totaling $300,000 in 2025. His father, Lorenzo Rossi, who is CEO of a subsidiary, earned about $186,000 in compensation in 2025. It is stated that Stephen Rossi does not participate in decisions regarding his father's compensation, which reassures some independence in that process. As mentioned earlier, Stephen Rossi's ownership of the series of preferred stock, which gives him 51% of the voting power, means he essentially controls the outcome of shareholder votes. This is a crucial piece of information about how the company is run. Worksport is facing a critical shareholder meeting where they are asking for significant authority to restructure their stock through reverse or forward splits. This is often a sign that the company is struggling with its stock price and wants to boost it, possibly to meet Nasdaq's minimum price requirements. The massive drop in shareholder return shown in the performance table, where a $100 investment in 2023 is now worth only $24, highlights the serious challenges the stock has faced. While sales are improving, the company's stock performance and the potential for a reverse split, which historically carries risks of further decline and even delisting, paint a picture of a company in a recovery phase trying to regain investor confidence. The fact that Stephen Rossi holds so much voting power means these proposals will likely pass if he votes in favour. The risk I am watching is whether this reverse split, if enacted, will actually improve the stock's performance or just be a cosmetic change. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.